Hashrate is sponsored by Vanta Investment DAO. Get the Vanta NFT on OpenSea and gain instant access to an exclusive community that gets allocations in cutting-edge sectors like GameFi, DeFi, artificial intelligence, and infrastructure. Vanta is a powerhouse hive mind of over 250 visionaries, from trailblazing company founders to savvy investors to a cold community influencing over 10 million followers on X. Join key industry players like Mario Nawfal, Seed Phrase, the CEO of QuantStamp, and myself, Mark Jeffrey, among others, who are already navigating the private investment landscape together through Vanta. Get your Vanta NFT and join the action today. Hello, everybody, and welcome to Hashrate. My name is Mark Jeffrey. BAMK has created NUSD, the Nakamoto dollar, which is the first stablecoin implemented as a BRC20 and Rune directly on the Bitcoin blockchain. Now, with 1.4 trillion in value on Bitcoin, BAMK and NUSD could prove to be a monster DeFi on Bitcoin unlock. After all, Tether is one of the greatest businesses of all time. In Q1 2024, net profits were $4.52 billion with 50 employees. But what if you could put a native stablecoin on Bitcoin itself? Could that be an even bigger business? Well, let's find out. My guest today is Jack Liu of BAMK. Hello, Jack, and welcome.
Hey, Mark. Thanks for having me on. This is great.
My pleasure, dude. Thanks. I'm doing good. So tell us about NUSD and BAMK. Tell us, how have you done this? How does this work?
Yeah, I think as crypto has advanced over the past decade, we're all building on everything else. So it gets easier and easier and more crypto native with every iteration. And so basically the background is there's a company by the name of Ethena, which came out with basically the first real implementation of the concept of a synthetic dollar, which is pioneered by Arthur Hayes in a blog post. Arthur Hayes himself is a former founder of BitMEX, where they pioneered the Perpetual swap, a way to do futures that's not physically delivered, that's settled in a rolling basis. Because back then, the futures market in crypto in 2014, 15, 16, it replicated a lot of the regular commodities contract you would see, like a weekly settlement, a bi-weekly, quarterly settlement. And to consolidate the liquidity, Arthur launched Perpetual swaps, which is basically rolling settlement every 8 hours. And this is the background for how this synthetic dollar is created. But back then, he was already saying, hey, if you wanted to kind of get a delta neutral yield, I think he had a 2016 blog post back then, just for traders that on BitMEX or anywhere else that had this kind of product, you would just hold Bitcoin collateral. I think this is called like Quanto futures, where like it's like Bitcoin as this collateral, not Tether, because BitMEX was famous for not accepting fiat, not accepting any other coin. It was just Bitcoin, but somehow you could trade Bitcoin futures, which is Bitcoin collateral. And the way to do it in a delta neutral, like kind of risk-free way to capture some yield was you would hold a spot Bitcoin on BitMEX at the time, and you would
let me stop you there, because I think I just want to clarify one thing that I think might be unclear to a lot of people. I haven't actually played around directly with a perp swap, right? So when you say delta neutral yield, people are thinking, well, why would I do that? Because I make $0, right? Like if it's delta neutral, when it goes down and when it goes up, they balance each other out. The reason you are getting yield off of that, because in perpetual swaps, the larger party, if more people are longing something than are shorting it, then the longs pay the shorts for the privilege of remaining long in the system. And if more people are shorting, it goes the other direction. The shorts pay the long a little bit every 8 hours. So that funding rate is the yield. That's what you're collecting, and that's why you can create a delta neutral. That's why you would create a delta neutral position. So far, so good?
Yep. And, just like people tune into the Federal Reserve to see what their interest rate policy is every month, you can consider this kind of like a degen crypto interest rate policy every 8 hours that reflects sort of people's sentiment on the crypto markets. That's the window in which crypto settles. So just like, Bitcoin's 24/7, 10-minute transactions, where Swift is Monday to Friday, 3 days. You can think of this as like more frequent interest rate policy, but not set by one central banker, but set by the entire market. And historically, because Bitcoin, people have been bullish on it for good reason. It's up 100 times over the last like 8-9 years. If you're expecting Bitcoin to double or triple in the next year, you might be happy to pay a 30% interest to go long the perpetual swap as a trader normally. So that's why most times the long side is paying the short side. And so if you're holding the spot position and offsetting that by placing a short, you're basically collecting little bits of yield every 8 hours that adds up to something like 30 to 50% historically. And then so that's what people were doing on exchanges for the past decade, whether it's individuals or funds. Whenever they saw, this is one of the ways people predicted like liquidation events as well. So whenever retail got overly bullish, this funding rate would get to some kind of out of control number where you're getting paid 100%, 200% on some of these smaller cap coins to go short the perpetuals, because people were just so desperately trying to go long and try to make money in a day. Like if you can double money in a day, then who cares with the annual rate, right? And then like only in sort of post stablecoin boom in 2023, Arthur kind of advanced this thinking from just how to place this position to capture the yields for yourself as a trader to how to tokenize that position and create a token for this stable asset and maybe pass on some yield that you can pass through that's generated from this. And it would effectively act like a stable coin, although I think legally is not considered a stable coin. It's called a synthetic dollar. Yep. And it was funny to me because I knew about the blog post even a year ago. I think I read it maybe within the first week it came out because I'm always a big student of what Arthur puts out. I'm not as closely connected to the Ethereum ecosystem, so it wasn't clear to me because his blog post was talking specifically about the Nakamoto dollar, which is what BAMK is calling our synthetic dollar, the Nakamoto dollar, in kind of tip of the hat to the Arthur Hayes blog. But I didn't know that Ethena's implementation was of this blog post just predominantly issued on Ethereum with a little extra yield with staked USDE, staked ETH, and then shorting the perpetuals to get an extra 4%. So when it came out and the token launched, I had already had a lot of experience in the Bitcoin ecosystem as a builder since maybe 2019 and specifically the last couple of years in ordinals as well when it came out. And it was always interesting to me to make a stable coin. I used to work at Circle during the launch of USDC and at the time, it didn't feel like the ecosystem needed another stable coin because there was already Tether was doing well. Like, why do you need USDC? And even though Tether is still much bigger, I guess, than Circle, they were able to build this business up from zero issuance at the end of 2018 to something like 32 billion circulating now. So there's rooms historically for multiple players. And so when Ethena implemented on Ethereum, I felt like there was like a crack, a window to kind of try this on Bitcoin. But not knowing exactly sort of how we were going to do it, it was easy to build a marketplace. It was easy to kind of like inscribe meme tokens, but this is a bit more of a serious project. So the way we did it was we thought about how to implement it in a quick manner, because I think there's multiple other teams that are talking about doing stables on Bitcoin. So there's people that are trying to do more like maker model on Bitcoin, like projects like BitSmiley, projects like BounceBit and things like that. They have these kind of stablecoin models. Then there's ones that are actually trying to do this Ethena model on Bitcoin as well, which we didn't know about at the time we started thinking about it. But it's like Hermetica, shout out to them.
Yeah, I've seen Hermetica.
Yeah. So we were like, okay, what basically the advancement of Ethena was they made it one step earlier. So let's go into what a synthetic dollar is because you are tokenizing this position on a perpetual exchange, then you at least don't have to interface with the banking system. So it's almost like Tether and USDC interface with the banking system as a business.
But what you're saying is that Tether, so in Tether's universe and USDC, there's a regular bank account somewhere like Bank of America or whatever, and there's actually fiat dollars in there, and you can issue 1 Tether for every fiat dollar you hold in that bank account. So with Ethena, there is no bank account. There is no Bank of America. There is just this delta neutral position of $1, which you have shorted and longed equally in both directions. So no matter what happens, that remains, your Bitcoin position or Ethereum position remains worth $1 always, and no matter what. And on top of that, you're collecting this yield, roughly 16% in the Ethena universe, plus 4% for the staked ETH, right? So you're actually collecting yield from 2 places. So you've basically created 20% yield in the Ethena ecosystem, and it's real yield. It's coming from, it's not like you're just printing more coins and giving them more coins to everyone, which is what Luna did, right? So people are like, why is this not Luna? Well, there's a very big difference here. You're actually earning it legitimately using traditional instruments of the financial world in TradFi that have been, this shit's been done for decades. It's not new. Right. So please continue.
And so from a user perspective, you can't really see the difference when you're using an ERC20 like USDT or USDC or USDE in the case of Ethena. I mean, there's a yield difference, but from an experience perspective, you don't have the headache of dealing with the banking system or whatever, which is one of the draw points from a user perspective. But as an operator, as a builder, that whole thing, as we know, you have to deal with lots of issues such as like backup banking, making sure your funds are moving, working capital, relationships with banks. It's a phenomenon that's like really. And if there was an opportunity to do that, someone could have done that many years ago. I mean, Tether used to be on Bitcoin as well. So on Omnibus, is it Omni Protocol? Omni Protocol, right? So it's like if the only opportunity here was that you could be the first to do it on Runes or BRC20, I think it's not as much of a interesting play as a builder, because you might be just a lame duck kind of like. And it's not a lot of work to do it. But here, there's like by working with exchanges instead of banks, that was already a 1 order of magnitude reduction in kind of operational complexity. And then the added benefit of there being a crypto native yield that is higher than the traditional banking system, then that is another kind of order of magnitude benefit in terms of like a draw for people to use. That combined with maybe being the first on Runes, first on BRC20, those were the trifecta of kind of incentives that made our team look at it like, okay, there is an opportunity here. So we went in with this kind of approach, and everything else in the business was kind of, we thought, okay, well, this is, let's go the traditional way. What investors did Ethena raise from? Okay, let's maybe talk to them. We have happened to know those people, many of those people as well. People were very excited. They got the pitch. They understood the trifecta: Bitcoin plus synthetic yield plus lack of banking required. This is how we were going to proceed. But we made, relatively last minute before the project launched, a decision that I think you've commented before, which is to back the project with SUSDE, the staked Ethena dollar, to begin with. And so you're kind of doing it as a bridge wrapper without, taking away from the possibility of doing it yourself. On the purpose. That part made it another order of magnitude, like kind of
simplicity.
Simplicity to go to market.
Let me just, for those who aren't following completely this whole thing. So rolling back to the top. So you have implemented NUSD as a BRC20 and Rune directly on the Bitcoin blockchain. Now, BRC20s and Runes traditionally have been just meme coins. Right. Yeah. None of them are useful. They're all just, fun stuff like dog go to moon and things like that. But nobody's done serious DeFi things or even a stablecoin using a BRC20 or a Rune. And what you did was you said, I like the Ethena construction. That's the right way to do this. But we'd rather not replicate everything Ethena did on their back end. What we prefer to do, at least for the short term, is to simply take Ethena itself and use that as backing for the BRC20 and Rune NUSD stablecoins on Bitcoin. And you created a wallet where you are buying and purchasing USDE, which is the Ethena dollar, and putting it in an Ethereum wallet, and then minting a commensurate amount of NUSD on Bitcoin and issuing that as a BRC20 and a Rune, and you never go above what you have, in your bank. So you've effectively created a tether for Ethena on Bitcoin, is the way I like to put it.
That's right. Okay. Like dollars work just fine in the banking system. The tether, the coin, the project is just a way to bring those dollars onto the blockchain. So it's kind of like we love Ethena. We think they're great. If I didn't build BAMK, I probably would have my money parked in Ethena. So why not use that and bring that to the Bitcoin ecosystem? And so once that shift was done, then this became sort of obviously there's a lot of other things to think about, but structurally much more simple to do, and that allowed us to make the project much less capital intensive, much less time development intensive, and then that was what brought us this shift where you could have kind of fair launch meme tokenomics type of launch set instead of because at the time that we were launching, this is at the end of April, early May, there was a lot of talk about the eigenlayer drop that just came out. There was a lot of talk about different, because remember the crypto had a big fall at the beginning of April, mid-April. Yeah. And projects, because of that drop, came to market with these high FTV, low float projects that even Ethena itself, like the retail, couldn't get involved until basically $10 billion valuation. And yes, there might be a lot of room to run to 50 or 100, who knows? But it was like that's when everyone's were preferring all these meme coins on Solana, like Geo, Bowden, all that kind of stuff. And so because the model of operations are simple, and we saw like even like Tether compared to their kind of ecosystem counterparts like exchanges, centralized exchanges, is much simpler in terms of headcount to operate, yet potentially much more profitable. That maybe not as profitable as Binance, but like profitable than every other company. Then we felt like there was a way to marry the kind of the meme coin tokenomics or the ordinals kind of free mint culture with this kind of like real utility. And that's, again, kudos to our teammates who thought of the backing of the Ethena. Once that was in place, then it triggered a couple other things like making it more of a fair mint. And so once it was a fair mint, we wanted to be very, because at the time it was always like, if this is so simple to do, maybe everyone else will do it. Maybe there's nothing here. Right. So we made it a fair mint, and the funny story is like many of our teammates probably didn't inscribe or inscribed very little. Of the Bank of Nakamoto dollar. Yeah,
we haven't talked about the other token yet, so people may be confused. Right? People might be like, "Oh my God, I could just mint dollars! Like that sounds great, right?"
Yeah, there's one more part. Yeah, there's one more part, which is Tether as a company is highly profitable, making last quarter I think $4 billion. Circle I think is very profitable. It's got very high valuations in the private markets, pre-IPO markets. There's talk of them having a plan to IPO. But there's always only the stable coin that you can touch with them. Like the user not only doesn't get any yield, doesn't get the 5% yield. I mean, I guess Coinbase is offering the 5% pass-through Coinbase for USDC. But oftentimes the user doesn't even get the yield, let alone the chance of participating in the company or the protocol. And so the dual token model has been pretty popular in certain like crypto native projects. And that's the idea of having a governance token alongside the actual stablecoin. So in our example, the NUSD would be the Nakamoto dollar. That is a synthetic dollar with those perpetual positions via Ethena. And then BAMK, B-A-M-K, is the protocol token. And that's the one that I was referring to that it was...
A lot of team members didn't mint, yeah.
A lot of team members didn't mint. On one hand, it's like, well, if it works, I'm sure there'll be team tokens or something. And on the other hand, if it doesn't work, I mean, I'm already not getting paid to do this. Why would the first thing I do be spend my own money minting this thing? And the minting speed was like day 1, day 2, day 3, day 4. It slowly went from like single-digit percentage mint out to even at the end of day 4, started day 5, it was like 17, 18%. So it's kind of like, is there actual demand by like random people who don't know about this project or know very little about projects? There was like some hints about the project on social media with the website. But you know, you don't want to be the reason it mints out to 50, 60%. Because then, like, why even do a free mint if you're going to mint it all yourself? Like, you're not really building a community. You're not giving other people a chance to get on the ground floor. And so, and you don't want to be the reason that it got to 50, 60% that got other people to FOMO in. You want to see if there's any.
You want to do more fair.
Yeah.
Let me ask you. Let me stop you there for just a second because I want to clarify a few things. So there's 21 billion, right, which have been defined as, you know, that's how many there can be, and it's a Rune. The BAMK token is only a Rune; it doesn't exist on BRC20, and there are 20 billion, roughly 20 billion, that was minted by the protocol. And you just have them in a wallet somewhere. The remaining billion were available for open mint. So you could, you know, it wasn't like all 21 billion were available for open mint. It was just a billion, which I think is fine. So there's about 1 billion or so circulating right now. Is that correct? Do I have this right?
1.3. The easy way to think about it is at the very specific block that BAMK was inscribed or deployed, the total supply is Bitcoin's total supply times 1,000, 21 billion versus 21 million. The total circulating is actually the remaining number of Bitcoins that have yet to be mined times 1,000. So it's actually 1.3 something billion. And the total that was, you call it pre-mined, was actually matching the total of that block that had been already mined in Bitcoin, which is Bitcoin at the time is 19.68 something million. And so here it was 19.68. And so that's where the 31,250 number comes from as well.
Oh, I was wondering about that. Yeah. I'd be like, why are these weird numbers for sale, right? Like
that's the block reward of Bitcoin. 3.125 in this case times 10,000 or something. Instead of 1,000. So this is a kudos to one of Casey's implementations of runes. Casey Rodamore, who's a founder of Ordinals and also founder of the runes protocol. So to give you some background, BRC20 was like the first fungible token protocol that really took off. And it caught a huge bid because this is before meme season. This is before Whiff, dog with hat. This is even before Pepe on ETH. You know, when Ordinals came out, highlighted by something like Ordi, this protocol BRC20 came out, which is made by Domo, another developer in this Bitcoin space. That got a lot of attention favorably because it was like a fair mint. Everything was like you can inscribe and just pay the miners and claim yourself. And for any projects that wanted to do a pre-mine that had a certain distribution they wanted to enforce, whether for utility reasons or for team or investors, they would have to just still make it a fair mint, but don't tell anyone the ticker, and then make the limit per mint the actual full amount, so that in one transaction you claim the entire supply. So it was either binary. It's either you make it like very fun, especially like something like Sats, which took 21 million unique mints to mint out. In which case, even if you're the deployer, if you wanted 5% of it, you have to pay for 1 million unique mints, 1 million times the Bitcoin miner. So it was just basically it was in lockstep, right? No matter who's minting, you pay the mining fees, no matter who you are, or you pre-mine the entire supply. What Runes did, which was, I thought, super interesting, which I think a lot of other teams will come to see the way it's working out for us and apply to their projects, is the fact that I think of it like as replacing the friends and family round, where you get your uncles and your aunties to invest, $5,000 or $1,000 into your new startup. You're replacing that with the on-chain ecosystem. What you do is, like, you can set a pre-mine, and this is the deployment protocol that has additional field in Casey's version for runes versus BRC20s. It allows you to set a pre-mine. And that allows you to, in our case, like I said, we set it to something like 93.75% roughly. And you pay one transaction fee to Bitcoin miners, and you secure this entire 93.75%. But then
you don't pay gas for like 1 million mints. You just pay one mint for most of it. Yeah.
For most of it. But then you leave the rest of it, and it's not one mint for the other 6.25. In this case, we have set it so that it took about 40,000 plus mints to get the other 6.25. It wasn't clear at the time we deployed because it was like basically 1 or 2 days after runes came out. Gas fees were still very high. Yeah. So it wasn't clear like what the numbers should be. There was a debate about making a 31.25 per inscription, which would cost 400,000 mints. But again, it wasn't clear the project was going to be successful. Not that it is clear now even. So we didn't want to put that much stress on people to pay Bitcoin miners 400,000 times. So it was about 40,000 times to mint out. So that allows you to build like a community. So instead of having like angel investors and family and friends that are supporting you, you get to have sort of Bitcoin people that know how to use an inscriber, have a Bitcoin wallet, which is sort of the prerequisites to be able to mint NUSD and hold NUSD anyway. So we thought this is like direct to consumer, give a piece of the protocol. Even though like BAMK team does not receive any revenue from this 6%, it was kind of like, this is the marketing cost of just giving away some percentage of the protocol. Because at that time, there's no even way to give people for TVL, or we'll get to that later, because it wasn't even an NUSD. It was just, let's start with the governance token as a fair mint for 6.25%. And that's how Bank of Nakamoto dollar started that way, basically.
Yeah. Okay. So that said, and I think all that's great. And I love the sort of open mint ethos of the whole thing. And I was there in the Ordi days. And that's where you first came to my attention. You were one of the people talking a lot about Ordi back when it was not cool. When all my Ethereum friends were like, what are you talking about, Mark? What is this? What is this BRC20 bullshit? It's not real. That's like Bitcoin garbage. Turned out to be one of the biggest bits of alpha that cycle, right? So without any doubt. And I think it continues to be, and I think it will grow even bigger, especially now that runes have come along. That said, one of the reasons, so you've basically got a wallet sitting there with just a shit ton of BAMK in it, right? So you've pre-mined it. And I know that you're giving some of that away as rewards for holding NUSD in a wallet. You don't have to stake it. You can't stake it. It's Bitcoin. So if you just hold NUSD in a wallet, you are receiving APY in the form of BAMK. So that wallet is, or will at some point in the future, distribute rewards to everyone who's holding NUSD now. And at the moment, the percentages are quite large. It's like 800%, 1,000% APY. In BAMK. Now, of course, the price of BAMK could fall, and those percentages would no longer hold true. But you're basically the more NUSD you hold, the more of that APY you will collect. That said, you still have this big giant wallet with a whole bunch of BAMK in it. You have the ability to mint up to 18.5 quintillion NUSD on BRC20. I don't know what the commensurate number is on runes, but it's probably something similar. And I understand why you did that. You want to make sure you never run out, right? You have to set the limit of how much you want it to be as close to infinity as possible, right? So that you can mint as much of that in the future. But there's nothing that prevents you from minting that or awarding yourself the BAMK, right? So how do we know that you're not going to do this? I know that's a question. I've seen this in the chat, so I know it's a question on some people's minds.
Yeah, similar to when you hold the actual US dollar, you're trusting the Fed to keep it stable and not print trillions, which they actually end up often doing.
Which they're doing.
Yeah.
So that didn't work out so well, but go ahead.
Yeah. And then with with the ERC20 tokens, I don't think there's anything necessarily preventing Tether or USDC from minting.
There's not. There's absolutely nothing, and we have no idea. There's no transparency. Yeah. We don't know how much they have in a bank account, right? Yeah. So, whereas at least we know how much Ethena USDE you have, so we can see whether the issued NUSD is lower than that, or roughly equal to that amount. Yeah. So, not that this matters, but the first Rune sticker that we have reserved was only for 1 trillion max limit. Just figured it was 10 times Tether, so 1 trillion seemed like a good number. But as you know, the runes that we put out for the for the synthetic dollar and USD came, a couple of weeks after BAMK had already come out, and the community, when told that this ticker was going to be, 1 trillion, they had the opposite concern that you just raised, which is a valid one. They wanted this protocol to be like a max number much, much higher that could live through the next quantitative easing, the next quantitative easing. And so because you're trying to do a token that is kind of on par with the dollar, then if the Fed has the right to infinitely print, you got to give this token the right to infinitely print. Because if you did it like a limited supply, it would just become like a deflationary currency. It would never inflate along with the dollar. So, so because you're doing a dollar, is assume Weimar Republic is basically the thinking. Yeah. So if you hold the NUSD, you will be diluted, even in the best case scenario, according to the way the dilution of the actual dollars are, or just, I guess, adoption of the protocol as well. Because right now there's 20, 30 trillion of dollars. And even in Tether's case, only 100 billion of stable coins. So as these things get adopted, those two numbers could converge, while all the numbers are also going up as well, because they're printing the traditional money. But what you're saying is like kind of a nefarious misprint. Like there's actually... We don't know. I mean, right. Yeah. Like, so that's like not a function of the US dollar. That's a function of governance and security of the protocol, or just malintent, that kind of thing. Yeah, it's not locked in a smart contract like it is usually in the Ethereum universe, right? There are no smart contracts. So how do we know you won't be an evil person? I guess you don't know. So everything is about like incentives, right? So it's like what is more profitable at any given time. So like I think instead of like going by the moral character, like, hey, here's my resume, look at this, here's my guarantee, here's my whatever, here's my words, I would just say, like, if you look at incentives, right? There's an argument when I guess Tether had $1 billion in circulating tethers back in, let's say 2017 or 2018, when it first hit $1 billion. If they had rugged, for example, at that moment, they would have ran away with $1 billion. They would also have every single government chasing after them, because you would have completely ran away with $1 billion. And if you look at the penalties to something like people behind FTX, right, versus something like people behind Binance, which to date has not lost user funds, you're looking at a 25-year sentence for Sam and a 4-month sentence for CZ. So versus Do Kwon also facing a lot of issues because of the whole thing. So going back to the Tether example, if they had ran away with $1 billion, first of all, they'd be on the hunt and on the run. And if they got caught, it'd be a very, very severe sentencing. But at the same time, compared to 5 years later, now that they have $100 billion circulating, they're actually earning $4 billion a quarter. Right. So would you rather run off with $1 billion and not be able to earn any more from the system, or would you rather to keep it going? It's a bit like if your business is more profitable, so you might as well just do that. Yeah, that actually makes a lot of sense. Yeah, so if you're the Federal Reserve and you have the right to keep on printing money forever, would you rather keep doing that, or would you rather like kind of run away with the money one time and then leave the system? So Yeah, I mean, that's a fair argument. It's not one I thought of. So yeah, I think you're right.
So especially with currently, I think the yield is like 30% or so on Ethena. Yeah. It's basically like every 3 years you return the principal that you could run away with or something like that.
Yeah, it makes no sense.
Yeah, so it doesn't make sense. Now, that doesn't mean that there cannot possibly be like a security breach or something like that. There's like other reasons why this could fail. There's also things like BAMK not failing, but Ethena failing. Because it's backed by Ethena, it could fail. And there's other reasons like Ethena not failing, but the counterparties that they put these positions on the centralized exchange, those guys failing. I think this is why Ethena calls it an internet bond and not really like a dollar. They're very keen to say it's a synthetic dollar, it's a bond. It carries risk. Just like, in the subprime crisis, people were selling you these bonds that added a lot of yield, and it had in the asterisk, if Lehman Brothers were to go down, this bond goes away. I remember working in Hong Kong, and underneath the HSBC building were a lot of average retail people in Hong Kong that were protesting. This is after the financial crisis, because they had been sold offshore a lot of these safe bonds that were tied to Lehman credit risk. So in the full transparency, when you are holding an NUSD, on the upside, there is this yield that you can earn. The downside is that you are at the credit risk of this Ethena dollar. You're also at the credit risk of the operational, moral, whatever I just broke down of BAMK, the team, whoever controls that. And then there's also the credit risk of the exchanges that Ethena is operating on. Now, we could go into some of those risks, like again.
I do want to get to that, but let's get some blocking and tackling out of the way first, because I think some very basic things haven't been covered yet. I just think we can quickly go over them. So, what is the reason you would want to hold NUSD? And there's really, in my mind, two reasons. One is you can take profits from Bitcoin or Rune's ordinals directly on chain, on the Bitcoin chain itself. You don't need a centralized exchange to move into dollars. You can move into NUSD. You don't need a bridge. You don't need a DEX. And that is very valuable. It just compresses the number of transactions. And just having a dollar you can use on the Bitcoin chain, hugely efficient, just from that point of view. Secondly, though, of course, you earn yield, right? So we've talked about, if you hold NUSD, every block, you're making a little bit of BAMK. And at the moment, it's like 1,000%. I haven't looked today, but it's roughly 1,000%. And as more people hold NUSD, that pie will get smaller, so you won't get as much of it. But if the price of BAMK keeps going up, then you might still see 800%, something like that. But over time, probably that's going to settle down to something more realistic. When do I get that BAMK? I believe it's in like 10 months, and then it unlocks over some period of time, probably in 290 days, I think. There's a vesting period after that 10-month cliff. And so we won't see a day, like I'm just wondering, like in a year from now, roughly, will we see a day with like a big red candle on BAMK? And I think you set it up so we won't, right? So explain that to us for a second.
Yeah, so that's interesting. So earlier in the explanation, we explained the 6.25%, which was just anyone in the world can claim by just paying a Bitcoin miner. You don't have to have money at the bank, right? Like in the analogy to the fiat world, you don't need to actually interface with the startup, like with the Uber, with the bank, with the Airbnb. You just said, anyone can just sign this DocuSign equivalent and you can claim a little bit of shares or tokens in the protocol, okay? That's kind of the 6.25%. Then there has been an introduction of another 6.25% exact matching supply. This is to reward holders of NUSD. This is the Deferred BAMK points program, okay? And if you're familiar with crypto, you've seen some models that sound similar like this, but there's actually a distinct difference. Most models are like, if you lock up your funds, like the Richard Hart model, like if you lock up your funds for a decade, you get this reward, okay? And you can't get this money out. Like you can, even a more recent example with the Merlin chain, there's a potential airdrop of Merl coins. And if you just bridge your stuff in, and I know a lot of people bridge their bitmaps into that protocol, which to this day they cannot withdraw. Okay.
Yeah, it's a Hotel California. Basically, the Hotel California model is one.
Yeah, it was like, give me some asset that you have, and now it's in my control. I'll give you some coin that I made out of thin air. Okay. So the way this program is different is you are moving your NUSD or your whatever funds you are using to acquire NUSD, whether it's Bitcoin or USDE or USDT. You hold NUSD in your wallet, and every block that it's in your wallet, you are being credited with deferred BAMK. Okay, but you are free to leave the second block after you put it in, and for the first block, you will still get that deferred BAMK. So there is no lockup or loss of control of your funds for any period of time. You have complete flexibility to enter and exit the scheme as you wish. Okay, so you can still use the NUSD. You don't have to stake it. You could use it as, like you said, a hedging instrument against Bitcoin. You think, this morning Bitcoin price is going to go down. So this morning you got some NUSD. This afternoon you think Bitcoin price is going to recover. You go back to Bitcoin. There's already services like Saturn and Dot Swap that kind of make this a more liquid experience versus the traditional PSBT marketplaces, like the way you trade NFT ordinals that are already trading BAMK and NUSD as well. Those be Magic Eden, OKX, and Unisat predominantly. But anyways, so you can use your NUSD. You're not doing some weird scheme like lose.
Yeah, there's no lockup period.
There's
you
no
can
lockup.
sell the NUSD or whatever. Yeah, the period of time that you held it, you're now eligible for bank rewards for that period.
Correct. So what is locked up is the bank reward. So essentially what's happening is, if I were to use the Uber analogy, what Uber brought to the table was like, oh, anyone can join Uber instead of only those accredited like taxi drivers in the old system. But what you didn't get by being an Uber driver is like the first ever Uber driver also,
and you mean accredited with a medallion, not like an accredited investor?
No, yeah, with a medallion, like a fixed set of drivers and whatnot. The problem with that Uber Airbnb model is that the very first host of an Airbnb got about $200 for a night. And the host today, 15 years later, is also getting about $200 for a night, right? In the Uber model, it was very empowering in one sense, in the sense that like you don't need to go through a whole process to become a driver. So if you're trying to make ends meet, if you're in between jobs, you can drive Uber and make money. So that is using the internet to empower you. But at the same time, the entire economics of the Uber company, the distribution was to founders, employees, and investors. And no average person had access to Uber until well north of 50, maybe even $100 billion when it came public, like more than a decade after the company started. So there's no piece of the pie that went to the drivers or the riders in any sense. So the next juice here is that the BAMK, in this case, the institution or the protocol, right? Rather than pay people, because if the perpetual yield of the synthetic dollar is always going to be at a premium to the regular yield in a bank, whether it's 10%, 20%, 30%, then 10 years from now, assuming everything is going well, people are still going to be able to put in NUSD and maybe earn 10, 20%. The same way they would today if we were to just pass through the yield. So instead of passing through the yield that's being collected, in this case, on our behalf by Ethena, what we pass through is the protocol token. So that if you think of the protocol token like a governance token that like kind of has long-term value tied to the value to the project, right? If that's the case, or it's a meme, depending on how you want to interpret it.
It's a meme coin for NUSD.
It's a meme coin for NUSD, right?
Oddly, it might be enough, right?
It might be enough. So because of that, that's where the 1,000% APY comes from, because it actually used to be 3,000%, and then 2 weeks ago it was 60,000%. So because the BAMK is being awarded pro rata. So imagine if Uber had like, I'm giving away 1 basis point of Uber shares for the next 3,000 days or 30,000 days, whatever it might be. 3,000 days is probably a better way to think about it. I'm giving 1 basis point a day. Then if you were the very first driver, you would have earned a lot more, right?
Yeah, I get what you're saying. The very first driver, by driving for Uber, and the first passengers, actually that single act or that collection of single acts created the most value, because that's sort of what generated the network effects that followed, but they were not captured by the people that actually provided the value. They were captured by, I mean, I don't want to, the venture capitalists obviously provided value. Travis, I know Travis, right? Yeah. And the people who were working with him earlier, they clearly provided value, right? Like, you can't really question that. But the sort of, the meat of it did not receive an apportionment of the pie that was created that was in any way equitable, right? Yeah. So in this universe, by using tokens, you can sort of correct for that.
Yeah, so the design is to let you use the synthetic dollar as you wish, move it around, change addresses, hop between wallets as you wish. But the reward is tracking you as you go, and you can enter or leave the system as you wish. And the reward, which is being part of the protocol, that's being deferred 41,000, I think 962 blocks.
So in days, what is that roughly?
Yeah, it's about 10 months, about 290 days or so.
So nobody gets anything until 290 days from now. Right. And then you get like a little bit of it as
so you get exactly matching the block that you accrued. So every block, the entire block 1 BAMK is coming out the first block of the unlocking. The entire block 2 BAMK. So it's actually first in, first out.
So we will see a little bit of a flood. In 10 months, there'll be a day where a bunch of new BAMK is suddenly available to people who participated now-ish or before. So we will see that, and then it'll sort of taper off over time.
Well, it'll come out it won't taper out. It will come out exactly the same speed, because right now it's 31,250 every block being accrued. It'll be 31,250 every block. So it goes out for 10 months as well. Okay,
so that's going to be it'll be like Bitcoin. It'll be like Bitcoin emissions or Ethereum emissions or whatever.
So if you put in your NUSD in month 9, if you acquire NUSD in month 9, you will get your BAMK available in month 9 of the post unlocking period.
Okay. So let's just go over how we're doing right now. In terms of like the valuation, there's the amount of money that's flowing right now inside of NUSD. So there's about 1.2 million last time I checked of NUSD that has been minted. Is that correct? Right now?
Yeah, 1.2 million. Yeah.
Okay. So it's not large. No. And then the BAMK token. Last time I checked, it was like at around 12 million market cap. Of the BAMK tokens that are circulating right now, not the fully diluted, that's much larger, but roughly 10 to 12 million in market cap. That's still pretty small.
Yeah, it's about 8 million actually, 8 to 10 million right now. It's pretty small, but again, the project's very young, and there's a lot of new wrinkles in this because. Even Runes itself, the protocol that this is being minted on, is only been around for about a month.
Right.
And it's the first kind of synthetic dollars itself has been around 6 months. Yeah. But really, in the public eye, about 2 to 3 months, right? Yeah. Crypto, the idea of doing dollars on the blockchain, introduced by Tether, has been around for 9 years or only, but really the mainstream for about maybe 5 or 6, something like that. So a lot of entrepreneurs, what they do is they go do something that has been proven to be successful, and they want to do it almost the exact same way. So this is like the meme of like, I'm building Uber for X, like Uber for dry cleaning, Uber for hair washes, like whatever, car washes. So like, those are the ways that you can raise more money from VCs, because it's like, oh, I can see that there is a market, right? Whereas I tend to want to experiment with things that where it's not so obvious that you see that there is a market, but you kind of build into the future and then hope kind of the mind share kind of continues to funnel in that direction. And so even though stablecoins itself is still very young, I think the fact that Ethena is off to this very fast start, the model makes sense to me. I think synthetic dollars have a very bright future. And then I think Bitcoin DeFi, which is really non-existent, will have an extremely bright future. Even though this whole, even tokens on Bitcoin has only come out for about 16 months. So, you know, like you just build forward a little bit. So that's probably why the valuations are not so high. Like I would say that ERC20s have gained widespread appeal on centralized exchanges for listing. They all know how to list an ERC20. But things like Rune, I think, for example, Binance and Coinbase have never listed a Rune.
Right, they have listed BRC20s, but not Runes.
Yeah,
Binance listed already.
Yeah, in the case of Coinbase, they don't. I don't think they've even listed a BRC20 yet. So,
that's my knowledge. I think you're right. Yeah.
Yeah. So you know, if you are the traditional entrepreneur or the traditional VC, you wouldn't be interested in any project that is not even technologically compatible with some of the bigger exchanges, because the first instinct is, why did you do it like that? Like, why did you not make it on something that could maybe get listed on Binance? You know, so you have to project forward that, okay, I think Runes can be successful enough that it will pull in a Binance and Coinbase in the future. And so, you know, that's what that lesson I learned when I was at OK in the very first year. I used to work at OKX before they were OKX. Out of Beijing, and there was an investor, a very famous investor, came to the office, and at the time, Bitcoin itself was a 5 billion market cap asset, which today is 1.5 trillion. And I was one of the only English speakers, so I just took the liberty to kind of pitch the company in English the way I saw it, which was, my view was going to be very crypto native. It's going to just keep on trading more and more crypto and other things. At the time, I didn't know there was going to be NFTs or anything, but I just said, whatever comes out in crypto, this will be like the place to be. If you look at our market share at the time, we had like a 20, 30% global market share, 50, 60% kind of China, Asia market share. So it's like, hey, look, if you believe in Bitcoin, crypto is going to the moon, and we can maintain a 10, 20% market share, this could be very, very big business. The investor was like, oh, that's the direction you want to go. But you know, one company on the New York Stock Exchange or NASDAQ, in the case of Apple, at the time had just crossed 1 trillion in market cap. And they're like, how can you as an exchange ignore stocks, commodities, FX? And you're I'm thinking your business is too small because you only trade this $5 billion market cap asset. So you telling me that you have a 20% market share is irrelevant to me because you have a market share of something that I consider a zero. And this was a time when the investors didn't want to buy Bitcoin because they thought that was risky. So they wanted to invest in like infrastructure or businesses. Oh, so they were like, okay, well, you can expand from here to like more traditional markets. Those are bigger. That was the thinking.
That is how they would think at the time.
Right. Yeah. So, but, you know, as time has played out, if you have a fast enough growth rate and a technology reason for this thing to grow faster, it has ended up being the other way around. Now you have ETFs listing Bitcoin. So instead of Bitcoin exchanges listing commodities, you have commodity ETF, you know, organizations adding
that's
Bitcoin.
Really interesting.
Yeah. So when you think of it like that, then I remember when stablecoins first came on, it was like one of the businesses that people actually didn't like because that was in a zero interest rate environment. So there was no understanding what the business model even was.
Yeah, I didn't know. I was like, how are these people making money? It doesn't make any sense to me. This is a dumb idea. That was honestly my reaction.
Right.
I don't always get them wrong like that, but that time I totally got it wrong.
Yeah.
So,
the JP Morgans of the time, you didn't expect to do meme coins or launch their own blockchains or build exchanges, but at least you thought, okay, when it comes to stable coins, they can tokenize their own dollar deposits and would instantly, day one, be bigger than Tether or USDC. So again, using that traditional mindset, you would think like the opportunity is to bet on a JP Morgan to make a stable coin versus even a Tether or USDC. So I just happen to think the other way. My time in crypto has taught me, going after new markets is always better. So instead of trying to get the Amazons, the Tiger Direct to accept Bitcoin, that was like the first wave, right, of adoption. 2013, it was like, let's get Shopify to accept Bitcoin.
Yeah, that wasn't going to work. Yeah.
Then it became, instead of using it as a currency for traditional e-commerce, it became, there's now blockchain commerce called NFTs and ordinals like OpenSea, Magic Eden, OrSwap, etc. So that's always been good to me, that way of approaching things. It's also more fun to think that the world can be a little bit different, a little bit more open in the future to explore. So I think because of that, it's just a very long way of saying that this is very early. I can totally understand the skepticism on the valuation of this. But at the same time, considering the project only started maybe 20, 30 days ago,
that is crazy.
The growth rate is tremendous.
The growth rate has been tremendous.
Yeah,
I've been watching it. I haven't been there from the very beginning, but almost the very beginning.
Yeah, but at this snapshot point in time, I think you might think the valuation or the TVL is very, very low compared to what it could be.
I don't disrespect it at all. The growth rate has been fantastic. And crossing $1 million in TVL and the NUSD, that was like a psychological barrier. I felt that one because I wasn't really sure if it was going to get there, and then when it went over, I was like, okay, I just feel like it's going to go now, right? Like that's just my own personal opinion, or at least it's got a decent shot, right? So, so let me ask you a couple more questions because we're sort of coming up on the hour here, and I want to make sure I get some of these in. Okay. So, who are all of you people behind this, and where are you located on Earth roughly? Like, sort of, is there a domicile for this, or are you guys sort of all over the place? And how many of you are there?
I think it's very spread out. Okay, so across many different continents, different nationalities, and like we might not be many in count, but I think we've been very efficient. The team has been working together for well over 3 or 4 years, some 5 years, and across many projects. I say one thing is the team is very resilient through business cycles, through projects that might be a little bit too far out there, that takes a long time to cook. And the team is the same team that built OrSwap, the first marketplace on Bitcoin, and we were known for building always non-custodial projects. So, and building in a way that's very open and collaborative with the ecosystem and an on-chain ecosystem. And so that's why it was a little bit backwards, in my opinion, to even try doing something like a stable coin. It was only when this new synthetic model came out that it became interesting for our team. So even like hedging positions on centralized exchanges, if we were to not use Ethena, appears to me like a little boomer to me. And so
watch it, kid. Who are you talking to here?
But there is a path. Like so, if it was to get off of Ethena, it would actually go on the on-chain perpetuals, hopefully on Bitcoin directly, but maybe on other projects. So, but the great thing about so community matters to our team even more because of the size of the team, the limited size of the team. By having sort of other people in the community, have exposure via inscribing the tokens or buying a little bit on the secondary, we've gotten people that, no disrespect to the direct teammates, but that have contributed more than them in the sense of like, making memes, making content, making FAQs, making videos, hosting spaces and things like that. So it's really a collaborative kind of effort. And yeah, so I think there's enough people that kind of know who we are. I would say that I might be maybe the person doing the podcast. Did you see some tweet out there that said, there was a tweet by, I think, the Monad intern, who used to be the CMS intern. He has the official Twitter handle @intern.
Yes, I've seen that handle.
Yeah, so his handle put out something that we love as a team, which is like the best crypto project just has this following team makeup. It's one podcast guy and 5 top engineers.
Yeah, I mean, more or less, right?
So I would say our team fits that profile.
Got it. And so you're the only one that's doxed. You're the only one we know about, right? So the other 5 we don't know?
Yeah, I don't think they're intentionally trying to hide or not dox. It's just, if you were a Chinese speaker, we can get someone else to speak Mandarin better than me to interview. Yeah. So,
okay.
Yeah.
Fair enough. Fair enough. So when I use this thing, and I've been using it a lot over the last, 3 weeks or 2 weeks, I guess is all it's been. When I basically, I'm just more familiar with Unisat, although I do use Magic Eden now when I want to sweep something. It's a lot easier to sweep stuff on Magic Eden than Unisat. But getting in and out of NUSD, it's not bad. So I bought a bunch of NUSD, and then I decided I wanted to actually buy some BAMK. So I was like, okay, I'll redeem my NUSD, and this is good anyway. It's a good workout to sort of, see how it works. So I put my NUSD up for sale, and it took like roughly 15 hours or so for it to get bought. And I assume, so are you guys buying that off the market? Like what happens when I put NUSD up for sale? I'm assuming you guys have to buy it, or somebody has to buy it like relatively quickly, right?
Yeah,
how are you guys handling that?
Yeah, I think you were doing it in an environment where there was very little NUSD circulating at all. There was very little demand for NUSD. Like if you look at a day like today, there was over 200,000 NUSD that changed hands. So if someone were to post NUSD on the offer for like less than $1, I think it would be picked up today very, very quickly, whether it's one of us or much more likely to be someone in the public sphere. But this is because there hasn't been like kind of open minting or a wider spread of minting and redeeming out of the SUSDE pool. So yes. what you'll hear about in the next week is an update to the system. So the way Tether does it is they have an address that you can check to see, how much is circulating, whatever. But then they have like another authorized mint. So it's like a pre-mint. Don't count that in your calculations, but that is allowed to be minted beforehand for distribution. So we will have a second address that will show sort of an authorized mint that you can, and a transparent way to track this for audience that's monitoring us, which will then enable sort of a direct minting and withdrawing process. So like you don't have to buy it off of the Magic Eden. And what that will happen is that you can still sell on Magic Eden, but they will open up the doors to an arbitrager who can buy that order, immediately redeem it out for the SUSDE. So that allows many other parties, market makers, to come in and kind of like sweep.
And that helps you keep the peg, I assume, right? So that's like all this arbitrage is sort of what keeps things at $1.
Yeah, so yeah, exactly. So it's always $1, but the market price of it may not be at $1 unless there's people that are able to arbitrage it around. So yeah, that's what will happen. But you were very early on in the rollout. So as you know, like we have a pretty good sense of what are each of the next steps, but we want to sequentially roll it out. So our model is a accelerated sequencing. So get the sequence correct, but don't worry about something 9 steps. Like worry a lot about what is your 9th step, what is your 12th step, and should you adjust that based on what's happening in the market. But then don't work on step number 9. Just hold that thought in the back of your mind, and then try and execute the current step as swiftly as possible and move on to the next step. So, like these things are also going to be helped when there's going to be AMM swap pools, like then you don't have to list your order as a PSBT in 15 hours. Someone else going to sweep.
Wait, just slow down there because I think a lot of people didn't follow. You dove into the. So with BRC20s right now, and Runes, they are traded as partially signed Bitcoin transactions, which means you define a parcel of 1,500 NUSD that you then and you can only buy or sell 1,500 if that's the number, right? So it's like in a little package. You can't just decide to go in there and be like, I want to buy 500 632 NUSD, right? That you have to buy the parcels that are available, which is very different from sort of pool tokens on Ethereum, where you can buy and sell any amount you want at any time immediately. And so that's apparently coming. And I was going to ask you about that. So we do expect to see pools soon, right? Or soonish.
Yeah, there's already a pool actually on DotSwap. So there's a company called DotSwap. I think the total LP is only about 10,000 NUSDs in there. But if you're buying like 50 NUSD or $200 of NUSD, the slippage is really negligible, and that allows you to get in and out instantly. So you don't wait 15 hours or 1 hour, 2 hours. You can get it instantly. And there's another platform. Again, these are not endorsements. I'm not too familiar with their products, but just telling you how they work, how they should work. There's a company called Saturn. They've actually figured out a way how to do partial fills on an order book with bids, not just offers. There's a Saturn swap, Saturn BTC. And that allows you to kind of potentially list 20,000 NUSDs and have someone just be like, I want to buy 300. And they'll split that for you. So, and then when centralized exchanges list, or if they list, then that will also be a case where people can just deposit and trade.
That'll fix it. If it's not a centralized exchange, that just fixes everything. So.
So
I mean, let me ask you about that.
There's things coming on the way. Yeah, go ahead.
There's things coming. Oh, I like to hear there are things coming. So, so the big question I have, or one of them, when I think about stable coins and I look into the past and I see what made some of them work. There's been a lot of stable coins that have died, right? There's a lot that we never heard of, or they just never took off, right?
Yeah.
I do know that Tether almost never took off. And, I know the guys behind that. They were here in LA, and, Brock Pierce and, people like that basically made this thing, and they needed an exchange to buy it and, sort of back it, create pairs with it and provide redemptions in and out of it. And then it took off like a bat out of hell and became one of the greatest businesses of all time. But without that acquisition, it probably wouldn't have worked, right?
Right.
So, and I've seen other stable coins, even, I don't want to bring up Luna. Luna is a bad example, but also a great example because for a period of time, it actually worked very well. And one of the ways in which they gained adoption, there was obviously the Anchor protocol providing 20% APY, but also because they were working with other stable coins in Curve. They were famously, creating the 4 pool with Tether, DAI, and USDC as, they were going to be the 4th great big stable coin on Curve. And having that liquidity of being able to trade in and out of those stable coins seems to be a component of making a successful stable coin go from 0 to 1. Does NUSD need something like that? Do you need to integrate with Thorchain and so that other stables on other chains can seamlessly swap back and forth with NUSD, or do you need a centralized exchange to adopt you? How do you respond to that? Do you think about those things?
Yeah, I do. I think about things like our team is very small in size and we love working together. We don't necessarily want to directly increase the team size substantially, and there's a lot of things to do, but a couple of things is that Bitcoin, in theory, should be the largest ecosystem in the world. Any kind of coordinated incentives that you see on Solana or Ethereum, you could see a 10 times bigger effect on Bitcoin. So you know how like in a normal centralized company, there's bureaucracy and there's roadblocks to getting things done, and like this supervisor is not approving this vote, that this plan, this person hasn't signed off on this email to approve something. In our essence, instead of thinking about what is it that we need to build, we think of it like, what are we stopping other people from building? And we think about the tokenomics, the incentives. So I think everything you said should be built, but instead of taking, like, because, you know, if you think about these VC funded projects, because their tokenomics are not revealed and they want to have as much hype going into their TGE, they have things like paying this guy off to pay that guy off to then look like they have an ecosystem. It's like a fake ecosystem.
Potemkin Village ecosystem.
Yeah, and there's obviously rumors that like Merlin borrowed $1 billion in TVL to like look like they have $2 billion of TVL, and that it's a very successful L2 to try and like trick the retail to also put some TVL in, and then remove the fake TVL, the borrowed TVL, and then hopefully you're left.
Solana did this exact thing. Solana 11x'd their TVL fraudulently. We know this now. Like, it got admitted, right? So,
yeah. So we don't rule out tactics like that. But if you look at the record so far, right? Like, clearly the team had their financial resources just inscribe out the entire 6.25% to make it look like it sold out in 2 hours, something like that. That didn't happen. It took 6.5 days, or more than 6 days, for this thing to mint out. And then there's clearly people you could call, be like, hey, want to put 500K in here? I'll just give it right back to you. Want to put 2 million in here? You can make the TVL look very sexy. Because, you know, there's other projects on Bitcoin or Bitcoin L2s like BitSmiley, who has, I think last I checked, 7 million in TVL. But I don't see a lot of buzz on social media about that, because I don't know how much that 7 million is their own money, their friend's money, their uncle's money. So it's like, how much of the real TVL do you have? So what we like to do, and we think is the healthiest for the project, is to build tooling, be transparent, be open with our plans, and enable with rewards and whatever to see how this thing grows on its own. And if it grows slow, okay, that's actually a great feedback that we're not doing something right. So, like, for example, if we had this like borrowed TVL kind of game, and I heard from a friend, because I'm pretty connected to the general crypto space, and I have nothing against the way the crypto space is currently run. So this is not like an anti-traditional crypto movement from us. It's more like we think the technology, the blockchain is so powerful that there's a way to do this faster. So I don't think of it like we are not taking borrowed TVL or VC funding to prove a point and be willing to grow slower. We think if done right, it actually grows faster without that stuff, because there's like a better way to do it. And so, like, for example, if we had taken a borrowed TVL approach and got something like, to make it look like this 5 million of USDE backing 5 million of NUSD, right? Then we could just be technically higher TVL than we have today. But then we don't know if we're doing not growing organically for reasons X, Y, or Z. We don't know why we're not growing. And then you get trapped into, well, since we're not growing, let's just go borrow another 10 million of TVL. So it looks like it went from 5 to 15. So then it's kind of like it's not fraud in the sense like you're not running away with user funds, but it's like you're doing a lot of like fake botting of accounts. So if you look at the Twitter account for BAMK, it's got a natural growth of Twitter followers. It's got maybe 1,800 followers today. So the NUSD, when we first put it out there, we thought people were going to participate and want the airdrops and potential points. But it turns out like only that effect only really happens for VC funded projects that really hype up this noise. And so we weren't seeing a lot of effects. And so by not having this like inorganic TVL, like 5 million upfront, 10 million upfront, we were able to learn, okay, why are people not buying this? What should we try next? So then we introduced a points program, which most people like introduced a points program many, many months after the project's launch. And they only launched many, many months after the idea first came out, because you have to first spend a few months raising from VCs and things like that. Because the blockchain might work very fast, but the act of raising money from VCs is still like a weeks, months long possibility. So we introduced a points program. But then because the points were coming from who knows what these points are worth, and again, there's not that validation from VCs and fully doxed team members and things like that. Within 1 day, we changed from the points program to directly like, this is how much each point is worth. Like 1 point is 1 BAMK. And so now you actually have a BAMK with a with the transparent time that you will receive the BAMK. So I think it's been very helpful for us to like have very organic way of building this, because then we can organically know that we're not bullshitting each other like this is going to work, and we don't have unlimited capital to wait 5 years for this to work. So this is the way kind of like our team kind of thinks about things.
Yeah. Okay, a couple more questions before I let you go. First one is, looking at the Ethena design, it basically relies on funding rates in order to get yield for the users. And so positive from the point of view of Ethena, which is actually negative, right? Because they're making money off of shorting the position. And most of the time they're right. Most of the time there's a lot more people longing Ethereum, and by a large degree. But every once in a while it's the other way around. Like everyone thinks the market's going to go under, and so they there's more people shorting Ethereum than are longing it. And so the funding rate, not only you're not making money, you're losing money, because now you got to be paying off the other side, right? What happens? Well, actually, the way Ethena solves that is they build up an insurance fund for a rainy day, right? So in those days where the funding rate is negative and they're losing money, they've got this rainy day fund they've built up. And, that's not bad, but that could, conceivably be eaten through if the market went really sour for a long period of time. So it's not an ultimate, it doesn't solve everything. How do you guys view negative funding rates, and what is your solution for that situation?
So this is a structural problem, and if the problem is like big, you have to think that it will be persistent. So I like the insurance model, but insurance is always going to be only a fraction of your TVL. So with Terra Luna, they try to acquire Bitcoin as backing for USTs in addition to Luna, and then because Bitcoin is more real, if Bitcoin grows 2 or 3x or something, then suddenly they have enough to back the entire supply of USTs. But I don't think the insurance is enough. So, like for example, with I think Ethena, they have about 2.5 billion or 3 billion of issuance, and they can say, wow, they have the fastest growing insurance fund of all time, and have like $50 million of insurance. It sounds like a lot of insurance. But you can imagine, even when they reach $100 million, $200 million insurance, they're going to have like 10 billion of TVL. And so given enough negative days, right, of the funding rate going against you, then you're going to run out of insurance. And so the way that I think they're very smart. I give all the kudos for the original design to them.
No question.
And everything we learn, like I said, is built on top of what they've already learned. And by no means am I saying our solution is any better, but like logically speaking, they say the other solution is maybe at that point, because basically as long as the synthetic dollar is still out there, you have an obligation to keep the position on if you want to keep on passing through the yield. So one way is to logically deduce that when rates go negative, that these people that hold the synthetic would no longer be attracted to hold on to it because now the yield is like negative. It's like if the central bank lowered the interest rate to negative, like in Europe they did that, right? There's an idea that there's an idea that I would rather take the cash out and put it on my mattress, because then it's not declining, right? So you could logically say people are going to withdraw. So this is like Ethena's point, which is like instead of a death spiral, it's actually as the protocol is suffering, people are incentivized to help it suffer less. Naturally, because the yield has come down and they're going to withdraw. So you're banking more insurance funds when positive rates are positive on a high TVL. And then when the interest rates are negative, people are going to withdraw and redeem the synthetic dollar. Therefore, it allows you to hold less of a position, and you can close your short positions that you're paying interest on. And that way you have less notional to pay interest on. This is like their theory, right? And the insurance fund can cover it. They have another concept of like, well, if you don't redeem, maybe I will close the positions anyways, and then go buy traditional treasuries or RWAs or hold some of the reserves in Tether so that they're not bleeding. But I think that the issue with that is that how do you know when to switch to Tether and switch back. Like, is it negative rates for 1 hour you switch over, or 10 hours? And how much do you want to bleed? When do you deploy the insurance fund? When do you think you're not going to have enough insurance fund? And it's a little bit path dependent. Like, if Ethena today has $50 million in insurance fund, but what if the negative interest rate happened the first 2 weeks that they launched?
So what's the answer? How do you?
And people like to make mythical things. Oh, what a great timing! They launched in the perfect time in the market, in the bull market. They've banked this insurance fund. But again, these are all circumstantial. So I think the way we would solve it is, I think it's on our Git book, is that in positive funding rate environments, like regular environments, you can both mint and redeem. So the supply can increase or decrease, okay? And the yields are positive. And the bank rewards are given pro rata to NUSD holders, okay? So basically, to get more of this bank reward, people are normal times incentivized to go hold more NUSD. So you want the number to go up. The protocol grows, they grow, everyone's growing.
Yep.
In the negative environment, what will happen is that there will be no more minting additional NUSD for as long as rates are negative. So at least it won't increase. Like, your burden won't increase. That's like one fail-safe. But you can still withdraw, because remember, redeeming is good, because then you close your positions on the perpetuals. But then,
question: is NUSD destroyed ever?
Yeah, you can. Yeah, you can destroy, exactly. You can burn them. Yeah. So
you are burning NUSDs. Okay, I didn't know whether you were actually ever destroying them.
If there's a net redemption, yeah, you are destroying them. So yeah, so if you go from, let's say, one day from 1 billion TVL, and it's every day growing by $50 million, let's say, like something like that, and then rates go negative on perps, right? Not only do you say naturally there's an incentive for people to stop minting more, because why would you mint more for negative rates? But you just don't allow them to mint more, matter of fact, because it might be like other attack vectors, like short your token while you make the protocol suffer. There's like, just don't allow more minting. But secondly, instead of people saying that, like, oh, it's negative, I should withdraw, you actually want to encourage them to withdraw. So in negative environments, the BAMK distribution, the counting, would no longer go to NUSD holders for every block that is negative. It would actually be given to anyone who redeems NUSD pro rata.
Oh, interesting. Okay, so you're rewarding people for destroying their NUSD.
Correct.
And lessening the burden of the negative interest rates. Got it.
Actively, yes.
Okay. Yeah. No, that's a clever way to solve it. I like that.
Yeah. And so in the very first block, that when NUSD didn't exist, right? The first person, I think you can backwards calculate this. The first person who bought that 1,000 NUSD has now already made like 3, 5, 6x on the principal. But now, if you hold 1,000 NUSD today on a notional of a million NUSD, you're not getting very much, right?
Yeah.
Not as much as before. But if rates go negative and you start the game again of who can withdraw, who can redeem first, right? Then if you're the one who redeemed even $1, one NUSD in the first block, you will get all 31,250 back. So you want to be redeeming as fast as possible. So like if you're 1,000 out of a million, you are currently 0.1% of the rewards, right? But if you can be more than 0.1% of the redemption early on, you will get more.
I love it. It's actually a really very clever way to solve it.
Yeah. So instead of saying like the bank is very well capitalized, we have this whole insurance thing, we can withstand a lot of losses. It's just let's not pretend that you can withstand all the losses. It's more like if the bank is hurting because the rates are negative, and we have no way of getting your money while it's still while you're holding on to them, because like you said, there's no smart contract that allows you to like give a haircut to people's NUSD holdings to save the protocol. Then what you do is you want to offboard people, out of the bank like as fast as possible, so that the bank doesn't hurt as much. and then re-onboard them when the rates are positive. So you want this like very dynamic, like user-controlled kind of system. That's the thinking process. But as long as it's backed by Ethena, we can't control what their policy is. If they want to copy this idea and like give ENA points and whatever to the opposite scenario, we would love it if they did that. But this is really something that would come into the benefit of the BAMK project when it's not backed by Ethena, because then you can actually have your own policy on this. Yeah.
Okay. Well, let me ask you a question about Ethena. What happens if, Arthur wakes up one day and goes, "Hey, Jack, it's a nice little coin you got going on there. It'd be a shame if I released my own BRC20 and Runes." What if they start coming your direction and start doing the same thing? Wouldn't it be easier for them to replicate what you've done already than you replicate what they've done? How do you think about that?
Yeah, well, because DeFi is kind of building blocks, there's no need for us to replicate what they do. So it's not really like, do we do them better or they do us better? So number one, we won't replicate what they do. But in fact, in terms of like that scenario, it's like, well, JP Morgan come in and do what Tether and USDC does. Tether and USDC today are still giants compared to Ethena. So they can announce that USDT is now doing perpetual swaps. So they could do that. So the same way Ethena could, take our lunch, there's hypothetically JP Morgan can take Tether's lunch and Tether can take Ethena's lunch. But yet these things haven't really happened. Because everyone's doing a great job growing their own businesses. So I think like if it was attractive enough for them to do this, that's actually very bullish to what we're doing, and happy to share the pie, even if it's like 99-1. Like, I mean, if you really think about it, right now the pie
1% still pretty good.
Yeah. Right now the pie is like 0.3% to what they have. They have 3 billion TVL and BAMK has 1 million. So even though they haven't come over to the chain, they're still dominating the size that we are as is. So the other thing to think about is that if they've already given a lot of tokens to VCs, but also a lot of tokens to people on the Ethereum token, how much tokens do they have left to reward Bitcoin people?
Right, because your tokens can go to the users.
Yeah.
Whereas their tokens have all gone to the VC. I see. Yes.
Well, they have tokens that have gone to users, but they're users on Ethereum, so they don't have another tranche necessarily to give to Bitcoiners. Right. Yeah. So I think I have DM'd Arthur. He knows about the project. So again, my thing is more people know about the idea, better. Let us react to competition. We're not going to try and hope for no competition. And really, there's going to be maybe hundreds of these kind of projects. And I think actually, I think more likely than Ethena coming over to Bitcoin, I think more likely to happen first is that there'll be another project built on top of BAMK that brings this to another chain. So it's more likely to go that way, where we're built on Ethena, someone else is built on BAMK, than it is to start competing with each other. That's my guess. Yeah.
Well, I do think, I mean, look, when Ordi and BRC20s first hit and Bitcoin became fun again, right? Yeah. There was a strange moment where you were like infatuated with it. So was I. It felt like Ethereum early days to me. Yeah. When nobody cared except for a small handful of people, but you felt like, you knew a secret that everyone would know at one point, but didn't know right now. I feel like this is another one of those moments where I think, stablecoin on BRC20 or Runes, that's dumb. Like, who cares about that? Like, I feel people are grossly, wildly underestimating the importance of this. And so, whether it's you that captures it, I don't know, but I think somebody is going to capture it and it will be at monster scale. And I think so far your entrant in the race is pretty good. So even though it's small, I feel like it's very early days of it's something big later. It's like Godzilla as a baby, right? That's what it feels like to me. So,
I do want to spend a few minutes on this part of the conversation because I know you have to ask for your audience all the like, is this safe? Who's behind it? What happens if this happens? Yeah. But let's talk about sort of the market size for a second. Like all things go well. Like what is like how big can this be? And these numbers are very hard to think about. Just like if you were buying a pizza or something, you got yourself 10,000 BTCs, it's very hard to think about where this is all going to go. But I think logically, with a steady hand, you can think about it like there's empirical evidence that currently stables, the traditional stables, is 150 billion, roughly. 110 to Tether, 30 to USDC, that's 140. Say there's another 10 billion somewhere between BUSD and other things. And crypto, as an overall market cap, including stables, is about 3 trillion. And so in this weird mix of multi-chains and centralized exchanges and whatever, you have basically a 5% market share of stables to crypto. If you think that a stable on Bitcoin will be 5% of the Bitcoin market cap, then Bitcoin's at 1.5 trillion, half of crypto. Then you would think that a Bitcoin native stable, that market is about right now $75 billion. And then if you think Bitcoin's going up 5x to 10 trillion or something, 6x to 10 trillion, or bypasses gold, then yeah, the market for synthetic dollars on Bitcoin is like, 300 billion, something like that. So, and then you apply like a multiple or discount, whatever it is, for the protocol token. Like what is that worth, right? Like, so in the case of Uber, like how much is their, revenue per year versus their market cap? It does a significant multiple, like NVIDIA has a significant multiple, right? So then, that's where it could get interesting. And then I think for all these concerns about, okay, what about, do you have the right to mint more coins, dump on plebs, rug, all this stuff? What happens in centralized exchanges like rug? Like if you think about one day, we thought about into the future, can this go fully non-custodial? And I think the answer is yes. So the way it will work is once you have on-chain perpetuals, right, then you could have an auto bot that places positions and mints new tokens based on logic. And there's some world where you can set it up and this thing becomes fully trustless. Like if this hits this wallet, then this is minted, then this position is taken, then this is unwound. And all that code can be transparent. All the positions on the perps can be transparent. Everything transparent at all times. And you would think that, well, then you just made it like a perpetual machine. And like, what's the gotcha, right? What's the gotcha? Well, the gotcha really is that as long as two things still exist in this world, this perpetual machine, as a market size, can continue. Not whether our project is going to capture or not, but just looking at the market in general with no bias. I'm not trying to pump any coins or anything like that. The math is this, right? The yield is coming from the fact that some people in this world, actually most of this world, still value dollars. Like if the whole world only valued Bitcoin, then there is no dollars. There's no dollars, there's no TVL, there's nothing. There's no Tether, nothing. There's no JP Morgan, there's nothing. So as long as there's people that value dollars, then there's an inefficiency, which is the people holding the dollars are not capturing it. There's going to be an interest rate because dollars you have an interest there. So there's a money to be made by, giving 90% of interest to the user, protocol keeps 10%, like something like that. Like there's always that edge. And in the case of where the interest is coming from in crypto, it's coming from that margin trade. And so as long as there's an expectation that Bitcoin is going to go up next year, and maybe at some point in the future, they're like, oh, it will never go up again because it's already at $5 million per coin. But I think even at $5 million, you might cause hyperinflation. It might be at 10 million. So so as long as there's an interest in margin trading, so there's the gambling gene in the market. And actually, our protocol is like anti-gambling. It's like we're talking about delta neutral. But I'm saying
the house.
Yeah. Sure.
Right.
Right. And the users are holding NUSD. They're not trying to gamble either. They just have a demand for dollars. But the source of yield comes from the people that want to go margin long. So as long as there are still people going margin long, there will still be this synthetic yield to capture. So dollar demand some kind of dollar demand and some kind of margin long keeps this trade going. And then you can program it so that the whole thing is automated. And actually, our competition, I'll tell you this. You know how they say, when they ask the Google people, do you fear about Microsoft coming in to do search? And they're like, no, just like we started in a garage, our next competitor is someone else in the garage, right?
Right.
So the next competitor to us really is someone's like, okay, well, if you can tokenize, if you can like automate this whole thing, why don't they start it as a completely automated project from day one and then have no team tokens, just 100% distribution to TVL people, so that make it look like this distribution is out of favor. The same way we tell you that the VC funded distribution is out of favor. So it can get more and more efficient, and that kind of project could be the one that like grows even faster. But that's something that, like as a human, as a technologist, I enjoy. Like I don't think of it like this project failed or something. I think of it like it kind of passed the baton to the next project that took over it. And it's just like, that's something we'll say up front. If you are a buyer of BAMK tokens on a secondary, it's like no one is telling you this is going any direction, up, down, nothing like that. This is just like, this is the era that we live in, and this is like a phase, you know. Just because BlackBerry eventually went bankrupt doesn't mean they didn't create value to the world at some point during their journey, you know, and contribute to the cell phone industry, for example. Yeah, so that's what our view on the total market.
Okay,
what's your view?
I think you're probably right. I mean, I do think. I thought about this exact idea. I think I told you this in another chat about 8 or 9 months ago when BRC20s and before Runes hit, but BRC20s were all the thing. I became fascinated with the idea of trying to figure out a way to create a BRC20 based stablecoin, and I couldn't crack it. I tried all the designs we all know, different variations of them. And I just felt it was unsafe. It was bad. It couldn't be done, and so I abandoned it. And then you came along with this idea, and once I saw it sort of pop up on the radar, I was like, oh, somebody cracked it. And once I saw how you cracked it, I really liked how you cracked it. I thought it was quite clever, and I liked the fact that you used Ethena under the hood and sort of built on top of that. As you know, as you say, Lego pieces, right? So Ethena was the engine. You built a new outside to the car and a different kind of car than what they're doing. They're on Ethereum. You're on Bitcoin, and you are sort of BRC20 and Rune native. You're ordinal native, whereas those folks are not. They're like Ethereum natives, and you're both sort of in your lanes, making the best thing, but still snapping those Lego bricks together, right? So I like what I see, and I congratulate you on all your success. I think the last few weeks have been fantastic. I think it couldn't be any better, and still sort of retain its heart and soul and open mint ethos, if you will. So I think it's been a spectacular couple of weeks. $1 million seems like not that much, but actually, I think given where you started from, what this is, and maintaining that open mint ethos, it's a lot. So congratulations. So. We are running out of time, though, Jack. This has been far longer than I normally do, but I'm really glad we did it.
Great.
So I want to sort of wrap it up now. Where can people find you on X, and where are the websites for BAMK and all that stuff?
Yeah, so the BAMK Twitter is bamk.fi, bamk.fi, and the website is bamk.fi. And then you can look for the runes if you were interested. It's called BAMK of Nakamoto dollar. And the NUSDs on runes is NUSD, 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 NUSD.
With little dots in between the NUSDs.
Dots, to fit Casey's restriction of not domain squatting and name squatting. So it's 13 characters or longer. The BRC20 is $sign NUSD, which is also taking advantage of the latest upgrade, the 5-byte tickers that allows for native stablecoin issuance where you don't have this extra supply out there looking like quadrillions like you do on Runes. So those are where to find the tokens themselves. For me, which you'll get from my Twitter, you'll get some opinions that are not reflective of the protocol. It's just my personal opinions about BAMK and many other things I might be interested in crypto in general. It's LiuJackC, LiuJackC.
Yeah, and I'll put links to all this stuff right at the top when I post the episode.
So that's it, Jack. Our time together has come to an end. My name is Mark Jeffrey. This has been Hash Rate. We'll see you all next time.